Hello, everyone. As the year is winding down, how's everyone doing? Hi, Jays. You doing good? Okay. Speaking about winding down, yesterday's Turnaround Tuesday call from, I think it was, I was short from the 1817 level. Hello, Majed. How are you? So this was a pretty nice trade. Anyone coattail it yesterday? Hope it helped some people here. So here's your daily. Okay. I'm looking for lower than that. I think gold's going to trade 1740, 1720. And I think silver's going to take out this low. I think I've showed this confluence a few times with the 200 week. They're both coming in a shade under 20. I know there's some fib numbers around 2050, but maybe we just get something dramatic down here. Take out the big round number. The Aussie was the other idea yesterday. And, not as big of a payday, but, hasn't broken down yet, but I still think it will. And it's because of this. So that's why I chose Aussie, even though, there were better. The euro was actually a better short, I think. Blake talked about, better get going. Looks like we could, make new lows in one day if we just had one good dollar day. Now you have a little wick on this. I prefer we just get it over with and blow off into early next year. So, and the yen finishes this off and goes to, above this high anyway. And that, it'll have to do some work because it's most likely, it's not going to diverge on shorter term time frames. It may on the daily. I mean, we could rally 100 pips and not be above 80 here. So S&P's still resilient, but you have to admit, I mean, it looks a lot worse RSI structure now than it did at the last top. The last top, we actually had one little divergence here. Okay. And then, this diverged. It took out this high by a little bit. So, that doesn't look that great to me. And you know why you don't have divergence in NASDAQ at this point? Anyone know? And then I'm going to pass it on. Tell me why we don't have divergence in NASDAQ. I'm being your coach now. I'm hoping a lot of people don't know the answer. Anyone know? Of the hundreds of you out there? Why is there not divergence in NASDAQ? You don't know, Zan? Okay. Go stand in the corner. Okay. No one knows. Okay. Well, that's your homework assignment. Let me know next year. Okay. All right. So, oil, I know there are a lot of people yesterday here in F.A.C.E, people were saying 85 crude. Well, if there's a place for it to fail. So, think about it. All the way back here, both the stock indexes and crude were making new highs together. And it's been, we've had successive higher highs in the S&Ps, and looks like this could just be a correction in crude, and we have another wave to the downside. Next year, maybe it happens with the dollar blowing off. We'll see. And for you US dollar yuan watchers, I know we're pulling back, but we're not even close to that low when the PBOC raised requirements for holding offshore yuans. So that's it. The year's old lang syne, right, everybody? We have a couple more days left here. Who had a good year? Well, be honest. Who's trying to break even? Give me a why. You're trying to break even? Okay. Stop trading for a while. Get on, okay? Go back to the drawing board and get on a demo or reduce leverage. Because the thought that you even have that in your head tells me you'll force things because you're trying to get even. Forget about it. Paper cut? Oh, you're paper trading? Okay. So our guest today is Miad. Haven't talked to him in a while, so we'll be talking to him at the bottom of the hour. If anyone knows what to do with Canada here, tell me, because I don't know if we're going to get a break in the crude here. You would think that we could eke out another high in Canada, and we're not going to break down. That maybe there's one more hurrah in Canada towards 31. I remember that being an important target on the weekly. Yeah, you have this 200 week moving average up there. Oh, great, Laura. Glad that we're helping you out. We've been at it for 4.5 years. This free webinar. So we plant good seed by helping the community. We give a lot away free. The chart of the day, the blog. We even give away our membership with the light membership. So we're definitely, for this industry, pretty kind, not really ruthless. Blake's whole idea was that people had a place to go that weren't, hedge funds. That means, individual people that are attempting a very difficult task. So to make it affordable for everyone, and also to, provide, at least let you guys know or give you an idea of what we could offer 24/6 with what we do here an hour a day. So what happens behind the scenes after F.A.C.E is a lot of hard work. All the analysis, hours of analysis by Blake and the team every day, updating key points. You'd have to have a staff to keep up with this kind of analysis and all these different instruments. You'd have to give up sleep. So who's going to sign up today and call it a New Year's resolution that you're going to pay to learn instead of paying the market while you're learning? Anyone? Out of all you hundreds of people out there? One person. So the best way to say thank you to us if we're helping you out here for free is to join. So you could plant good seeds too by rewarding those who are helping you along the way. And I'm sure there are many landmines you would have stepped on if you hadn't heard this commentary for the last 4.5 years. I'm not saying we're always right, but we always say where we're wrong and admit when we're wrong. And say, I don't know if we don't know. So glad this year is wrapping up. You still haven't used your trial yet? I don't know why you're not using it. So this is really going to be the test in for the metals, if I'm right about new lows coming. And gold's accelerating to the downside right now, as is silver. So, you know what we're, okay. Well, you're saving it. All right, you don't want to waste that.
Hey, Dale. Hey, good morning.
Hey, how are you, Blake?
Good. We're waiting here. I think Paulie's here to
I forgot, Blake.
Dale, you sound tired this morning.
Oh, tired every morning.
Right. Well, so you know, you were talking about gold. I want to say a great call on gold lower. And matter of fact, the precious metals look really heavy, and actually, not just precious metals. Actually, the you know, we got some cryptos that are moving lower as well.
Yeah, liquidation. So maybe the S&Ps follow one day, huh?
Yeah, I don't know. You know, I'm gonna here. I'll show you really quick what I was looking at here.
So much for that correlation between Bitcoin and Nasdaq, because Nasdaq's held up pretty good.
You know, I don't. This is probably not the time that you want to be, you know, drawing correlations and trying to assume a correlation is gonna you know have a higher, what should I say, you know, being able to stick. It's not going to be as sticky this time of year. I wouldn't rely on it as much because liquidity is so poor. So, you know, I still think that Bitcoin or let's just call it the cryptos and you know, precious metals are going to have that. You know, I think at times that they're going to have a direct correlation. I think at other times you're going to see, you know, as the market, you know, puts money into, you know, these, you know, call them safe haven assets or, you know, maybe diversification type of assets, you'll see them act differently. I think depending on the time, but I think they both fill a similar void for the market. But as of today, yeah, we're seeing some precious metals weakness. You know, I'm constantly talking about you know, I'm just not sold on the idea that these precious metals are moving higher yet. But, you know, they were looking better last week. You know, you saw silver breaking higher above that $23, and I actually thought we were going to make it to the 618. We stalled at the 50%. Gold, little false breakout here. Now we're seeing a reversal, but then you have, you know, Bitcoin that's moving down towards what I think is pretty key support here, which is around the 46,000 level. And, you know, I'm still looking for Bitcoin to correct a little further here. I do think that this 618 is going to be very important, which, you know, if you want to just kind of figure out a zone between the 42 and 44,000 level, somewhere around here is going to be pretty important support. Ethereum looks a little weaker as well. We're about ready to attack that previous, you know, this is the cup and handle pattern we had been monitoring. I would say this really did complete. You can argue that that's completed. So we're approaching that, you know, breakout point, if you will. And I think Ethereum is going to have a lot of support down here around the 3,500 level. If that breaks, you know, that's when you start thinking, okay, well, we might actually see a little bit of a deeper correction. You know, like most people, I think those of us that are looking for a correction are just looking for a correction to buy. So it's just, you know, the question is where, you know, where are these, you know, crypto names like Ethereum or Bitcoin, where are they going to slide to that can give us some support and better levels to be long?
Hey, Blake, speaking about crypto, yeah, I watched a little bit of an interview you had with Gareth from In the Money Stocks.
Yes,
and he was worried about that there could be a big crash in crypto. I didn't catch the gist of it, but did he have numbers to the downside?
You know, he's been targeting 20,000 for a long time, and I think he was looking at, let me go over to a monthly chart really quick. He was thinking that this move here is very similar to this move here, I think, in 2018, 2019. I think that's what he was. I have to go back and listen.
Okay.
Or maybe
anyway, congratulations on that site, Blake. It's a great resource, getting lots of views. Really amazing job in what, a year? Been working on that? Not even a year.
Yeah, not even a year. You know, what's helped is doing those events at Trader Summit for that for those live events, which we'll have another one coming up here in the spring. So that's also helped quite a bit. So it's a good resource for, I think, for people to listen to and view. It takes a lot of work, as you know, Dale, just doing the interviews and and it's not just me, it's the social media behind it. And there's a lot of different things that are pulling, in different directions. So it's
anyway, I tip my hat.
Thanks. It's definitely time consuming, but I hope people are finding value out of it. But yeah, this Bitcoin looks like it's rolling over a little bit here, and it's very, he's thinking that there's going to be a move towards the 20,000 level, but I think everybody's waiting for that, Dale. And so, we'll see if we can see any more weakness. But who we brought in today is we brought in Paul Franco, which Paul, he does the European crossover. For those of you that do not know that. He does the European crossover, and he also, is in the chat room with us a lot. And he trades not just, I would say he's trading mostly equities right now and indices, and he trades a lot of NASDAQ, which is great because, the S&P has been, rocking higher towards all-time highs. We've seen the NASDAQ that's kind of, stalling as we reach for those highs. But I'd love to get it, Paulie's take on the market. So Paul Franco, good morning.
Hey, Blake, how you doing?
Good.
Hey, Dale, how you doing?
Hey, good to hear your voice, bro.
You too.
Yeah, Paulie, goes unnoticed during these hours usually because I think he's napping from time to time. So, yeah, I mean, you're up in the middle of the night trading. You live in Texas, but you're trading the European hours and trading the indices. So tell us what it's like, being up at those hours of the night and trading basically around the clock.
It varies. I mean, lots of times we'll see, if we see the indices rallying, you'll usually see a little bit of give back right when the European Open comes in. They'll take the market the other direction for a pause. But I've found that that you see the most liquidity, even though that we see these markets trade 24 hours. But you see a lot of great movement and follow through once you get into the U.S. session. But you do see movement here in the NASDAQ and the S&Ps. But when you want to see the most liquidity, where you see these moves, these rotations stick, is going to be during the U.S. session with those. And it's been a little bit odd over the last week or so with as we go into end of year. It's just been a push to the upside, and as these markets are basically one chasing the other and just chasing to the upside. We saw a little bit of a give back yesterday, but what I've seen mostly is that once you get into the U.S. sessions, you see great rotations in the equities markets.
Got it. One of the things that I've noticed during like the European session, as US session comes in, you start to see a little bit of, reversals, some profit taking, if you will. Do you try to time your trades around those hours typically? Or
no, because it just varies so much. I mean, usually if you get a market that's moving in one direction with this to the upside and they push it in that same direction in Asia, it's almost invariably you'll go and see them give it right back. or see folks take the other side once Europe opens. But as I said, I've found that more recently is that you're better off coming in and expending your energy trading straight into the U.S. session. You can see trades in the European hours, but if you want to see the more give and go, it's better just conserve your energy and come in. I'll keep track if I see something, going out of place, then I'll come into the European session and do something, sometimes even in the Asian session. But right now, we've been in such a one-way market, is that coming in different hours hasn't really been beneficial. Once we get past the new year, maybe we'll start to see a little bit of give and go as we move into other, as we move further into the new year, we'll see that depending on whether it's Asia or Europe. But right now, got to be honest, all the action is taking place in the U.S. session. It's not taking place in the European session, at least when it comes to equity futures. Now, we might be talking about maybe the DAX is making its move, but, if you're trading the U.S. indices, you got to be trading the U.S. session. Yeah, you're going to see movements in other sessions in Asia and Europe, but they're basically, the redheaded stepchild compared to the U.S. session. That's where everything's rocking and rolling, and where you want to be and where you want to expend the most of your energy.
All right. Well, now you use a couple very interesting methods to analyze the markets, and it's, I want to say, it's different than what a lot of people look at. Do you want to take the charts and show people how how you analyze the markets intraday? You post a lot of charts in our chat room. Paulie is very active in our chat room, and just to give you guys some background here, Paulie, I've known Paulie for over 10 years on like Twitter. Funny thing is, we've never met each other, but he's worked with myself at the Wise Trade Group, MB Trading, Ally Financial, and he's been with us for years. And one of the things I loved about Paulie initially, and I still do, is that he just traded the markets on his own. He did it for a living, and he still does it for a living, and has been doing it for so many years. And he comes in and gives his analysis into the markets and provides a lot of content and a lot of guidance for traders, and he does it, and he continues to do it. So I love having Paulie on the team. And so Paulie, take it away. Show us what you're looking at here.
Okay. And I do have this is just off of my rhythmic feed. So this is like a dummy. It's a good thing. I don't know if it even shows like it has a position, but sometimes I push the buttons in here. Is the advantage of using my rhythmic feed, which I use it, is at the depth of market. It just goes and goes and goes and goes. So yeah. I don't use this one, but looks like there's, let me see, I'll make sure it's all, okay, hang on, no. This was just they're dummy trades, or what do you call paper trades or whatever. I guess I must have clicked in somewhere in here. But anyway, that being said, I use that feed to go on and run my program here, not program, but click off this, is where I go in and use a profile. I do use that during the day, and that does go and help me. I don't know how many people are familiar with Market Profile, but I use that along with my volume, which I don't have that chart up right now. But primarily what I do here in the indices, what I've found is, and keeping it simple, I don't try and provide a specific analysis per se, as much as I just go in and trade into the levels as these markets rotate back and forth. You can see here on obviously I'm looking here on the NASDAQ on a 2-hour chart. This thing has, let me just go and switch this over to 2-hour here. You can see this thing has just been bananas. And you've seen the same thing with the S&Ps, where this thing is just, we rallied over 1,000 handles in less than 1 week. We've kind of given back a little bit yesterday, and you can see here that we're kind of losing a little bit. You can see right here that actually during the in the European session, you can see as the market started to rotate a little bit lower. You can see here, and one of the things I use, and people think, oh, that's kind of crazy, is that I've started using more actively for my scalping is a 3-minute chart. And the reason I use a 3-minute chart is because you can actually see, and when you look at this, you can see the flows, or should I say the rotations of the markets as it moves back and forth. And that helps for somebody, at least for me, that's a scalper. Now, primarily, I'll use the 30-minute along with the 2-hour chart. Here's a 2-hour chart. You can see actually yesterday we got a real nice gravestone doji, and you can see where the market started to push lower. And while using that, and what I've found, at least for me, that works better is I focus more towards just trading into the US session. So this is the time I'm getting prepped for the session ahead, setting all the levels and seeing what I believe the market may move toward, what it's experiencing. And then then once we get open into the session, push this back, then I'll go into using the market profile, and this set up on a 30-minute, if you want to call it a 30-minute grid.
Can you explain to us how you use the market profile, Paulie? Because I think that's like a really, really very valuable tool for you.
Let me see if I can push it right here. And I'm not a market profile aficionado, but the way that I go in and use it, you can see the yellow line here is going to be what the initial area, which is actually for the first hours too. These are basically each of these best way to explain it, blocks or whatever you can see here in the A session is going to be the first 30 minutes of the market. The next 30 minutes is going to be the B, the C, and forth. The yellow line in here that you see here is going to be the initial balance area for the first hour of action. And this market profile that I have, it's set up, you can set it up however you want it, but I have it set up for the regular trading hour, so RTH. If you look on here, I have it set up where the middle line right here, which is red, is going to be what they refer to as a point of control. So you're going to see the most amount of trading that takes place over this course was right here in this middle section right here. So it's going to be 511. But the gray area is what you're going to be here is considered, the value area here. Value area high is going to be up in here, and value area low. So quite often what I'll do is I'll use this is that when we break to new or higher levels, and you're taking out a level here in and this, we can push this, try and pull it back further. Bear with me. This encompasses the previous day. This one chart, for whatever reason, is standing up on top of everybody, so I can't open it up. But you can see here as the market goes and breaks higher, and basically the way I use it is to go on and use it as support and resistance using the value area high. Here's the value area high and the value area low. So we break down lower here, and I'm breaking past the point of control. I'm looking to go on and cover shorts, or looking to even up as we move into the value area low. That will also, if you look in here, I'll look at the previous day's session. You'll look, here's the value area low for the previous day's session. Notice that the low here, as we started selling off at the open yesterday, and we went into the second half hour B, notice that right here, you see the B at the bottom right there, just happened to run into the value area right here, the value area low. That's where they ended up finding support using the previous day session. So that's the way I use it. If someone wants
it's interesting. It's like those of us that grew up playing Tetris in the 80s and 90s totally relate to that chart.
Yeah, or you can actually go to YouTube.
What's that, Steve?
I just laughed.
Yeah,
like, oh man, it's almost like Pong. Got it.
But you can go to YouTube and watch various videos to get, because it's not something that I don't think you can go and explain in just a few minutes, or I'm trying to just give just a general idea of what it is. But I'll tell you what, once you use it, it's a tool that I use in conjunction with my other analysis. So like I said,
I think it's important to understand that for most traders, and we've got to get going anyway. And Paulie, it's just great to hear your voice, because Dale's going to interview I think Miad's coming in. That's right. And so but I just want to say that whenever you have a tool, like whether you're looking at what the tools that you're using, Polly, or maybe let's say you're using like point and figure charts or doing something that's outside the realm of, you know, your basic price charts, you know, and patterns and, you know, harmonics or, you know, whatever else you happen to be using. It's just applying another tool to help assist you, you know, come up with a decision whether you're going to buy or sell. And it's finding the methodology that you're going to trust. And the one thing that I've seen you do, Paulie, over the years that I commend you is you have adapted really well to the markets. You know, when I first met you, you were a predominant currency trader and it traded the SPOOs a little bit. And then, when crude oil was moving over the course of a few years, you were trading those, and then you've adapted into, cryptos this year and, back over to the NASDAQ because that's been the mover. And it's really nice to see you really evolve. And I've watched you for the last decade, as
Paulie's a chameleon.
He is, and he's been a great colleague of mine, and it's been very fun and to watch him over the years. And so Paulie, thanks for joining us today and giving us some insight to what you do and how you look at the markets.
Oh, sure, absolutely, and hopefully we'll be able to do, maybe in the future we may be doing some webinars actually early pre-US session to get ready for something we've discussed possibly is doing webinars where we'll actually be covering the indices and maybe some of the futures as we go into the US session, prepping just like I do at this time with level. We've seen the NASDAQ come up and you can see we've come right into this 470, kind of a little bit of an extreme move. We're kind of getting a little bit of bounce. And as I said, I do go and use the volume also at the same token to keep. You can see here the volume, the key volume area that we had was 16,540. So once we started to lose that, it opened the door for us to slide lower, and and here's the 540 right here. So we've continued to push as we pushed away from where that key volume is. We really pushed ourselves all the way down to this 470, but it's something that you and I have discussed that possibly we might go in and do webinar pre-US Open to get ready for the day ahead, whether it be this NASDAQ, S&Ps, and maybe some of the other futures markets.
Yeah, so just you guys that are listening in, we've got a lot of new things that are in store for 2022, and Paulie's going to be a big part of it. So, all right, thanks, Paulie, for joining us today, and I want to say thanks everybody for joining all of us. Dale's got a great interview coming up. So Dale, take it away.
Happy New Year, Paulie.
Yeah, you too, Dale.
All right, buddy. Miad, welcome back to F.A.C.E. How are you, bro? Long time.
Hello, Dale. How you doing?
Good, Miad. God, how long has it been since you and I had a conversation? A year or so? A couple of years?
Feels like it. How are you doing?
These last couple of years feels like a decade. You too? The last couple of years in the markets and everything that's going on. Are you going to share your screen? Yeah, do you have some things you want to talk about with us today?
Yes, I will. Yeah, you're right, man. It's been a really long year. Putting it behind us as we move into 2022. Hopefully things will pick up and life goes back to normal.
Yeah, I don't know. We have a new normal. Okay, so we're looking at the gold here, buddy.
We're cracking on with gold. Every time on the show, I feel like gold needs to be discussed. It's a great asset. Looking at gold, I think there is a lot of interest where gold is headed as we are moving into this new regime. We just came out of a recession not so long ago. And it looks like there is some interesting indicators to tell us where gold will be headed long term. In the short term, there's always influencers that we might not be able to react to. But in the longer term, I feel like there is one or two things I like to look at that is pointing towards a directional call on gold. What you can see right now is obviously the gold CFD chart on a daily candle. There is some indicators to tell us where gold does move or what it actually corresponds to. there is something that happened last year in August that caused a top in gold, and it caused it to come down. It started to create the bottoming pattern later this April, and got a bit more serious in May.
Then the flash crash low. Do you expect a flash crash low in August to hold me out?
Flash
That's
crash
at 1680 level. Yeah.
What happened over here? Yeah.
Yeah.
I've got a thesis about it, but from what I can see, from my perspective, no, I don't believe it will hold. I'm expecting these to give up. Actually, as we trade lower, and you kind of grab the headline on that. There's a reason why I expect this to come down and gold not sustain these levels in the medium to long term. One of the key reasons for that is the way interest rates are moving in the US. So I'll do a simple comparison chart for you. If I were to look at let's do a simple one, this 2-year yield on the US bond.
Okay.
It is, for those of you who don't know, the 2-year yield is fairly correspondent to what market expects of the interest rate to be by the Fed in the future, right? So the higher this goes, the more expectation is of higher rates. And if I were to overlay this with gold, we have gold over here, do a new price scale. If I were to invert my yields, more or less the peaks and the peaks in the bottom, more or less on that chart, does indicate something in here. It's never going to be always a perfect, but we're looking at a cycle regime here. And the time it started peaking out in gold lately was around when the 2-year yields started to make a move, but the breakout didn't actually happen until more recently. But you can see more or less that the yields telling us, look, rates are going up. Holding gold for investors will not be that profitable anymore. If I even go back in the future, again, major turning points, pretty much in line with that. So I'm expecting the same thing again as 2-year yields make their way towards possibly the 1% mark and higher. That will be detrimental to gold, and we're going to see lower levels in the future. And it's really based on the fact that interest rates are rising. So you can take the opposite bet if you think interest rates are not rising, which in my opinion, down the line is not going to happen. So the interest rates will go up. That's one of the things I wanted to discuss, because a lot of people are interested where gold is headed. And one of the major drivers for this is really about, are investors holding it or not? And this environment, they're thinking rates are rising, it's no point holding that. The other thing I like to
all about yield. So when you were sharing that 2-year, Miad, were we at about 0.75%, 0.75, 0.90?
That's right.
Okay, so Fed has plenty of catch-ups to do, even with quarter-point hikes, right? They, after the taper, just to get to where the 2-year is now, would be 4 hikes almost, right?
Let me actually take you, since you mentioned the hikes, I'll take you to the December Fed Fund futures. Again, for everybody who doesn't know what the Fed Fund futures are, that basically prices in what market expects by December 2022 the interest rate to be by the Fed. The lower this goes, the higher the interest rate. So market, as Dale just said, market is perfectly priced for 3 hikes. That's the max that the Fed can possibly deliver, or it's feasible that they could deliver. And actually even going a little bit lower than that, which again, Dale is pointing out in his own way that there is a bit excessive here, and we might be too frothy, and the opposite can happen. But again, what I try to explain is the overall sentiment, why we're here, why we're moving in that direction. Yes, maybe the Fed will flinch next year, they won't deliver all those hikes, so that could be a bit troublesome in the market. There's going to be some repricing, so volatility, which is good for us traders. We can take the opposite of that. But a general theme as you go into the next year and the following year is that the Fed funds futures yields are going higher on the 2-year, and all of that is playing out to be not positive for gold. Since we're talking about yields, there's another chart I wanted to talk about. One chart that everybody knows about is called the majority call it the US yield curve. Basically what it is, we are looking at the 2 stands. So if you subtract the 10-year yield from a 2-year yield, you arrive at a figure, which is about right now trading right over the 0.75 basis point, right? For me, this level is very important when I'm trading my yen pairs. Why? Because the yield curve is a benchmark for a business cycle. And if you look in the past business cycle, every time we dropped below zero, a little bit later we had a recession, and every time we peaked, we saw that all the yen pairs peaked with it. And I'm going to do the correlation for you in a moment to just amplify that. But talking about the levels, what's happening in the 10s, what's happening in the 2s, for me, the 0.75 is extremely important to act as a support as we move into the next month. And I really would like this to pick up and peak out somewhere between 0.9 and 1% again, so I can start thinking about shorting yen pairs. There's two reasons behind that. One, I don't think the 2-year yield has got a lot to go up. Plus, I think that the 10-year yield will catch up a little bit. That should drive the re-steepening, as we say, in the yield curve. And I'm going to compare this with one of the most probably traded yen pairs. It can be USD JPY, AED JPY. I take AED JPY because then we cover the commodity currencies too. So right now we're looking at the daily chart. The orange line is AED JPY correlated with the US yield curve. And again, you can see that major turning point. I'm actually going to take you back all the way to last recession just to emphasize that even more. So last recession in 2000 and post last recession is more important to me. So in 2009, we sort of created this bottom yield curve. The yield curve started topping out in about 2011 and started coming down, and so did AED JPY. Then we had another last hurrah in about 2013. And that's when the yield curve just gave up, AED JPY gave up with it, and you just saw this massive selling as the business cycle gave up about 2,000 pips on that yen pair, and it never recovered until just recently when the yield curve picked up again. So what I'm trying to say is, if you have a good handle on what's happening in the business cycle, what's happening with the yield curve, you've got a really good read on what's happening with those yen pairs. Right now, we know this level is very important for the yield curve, and I'm expecting a bounce. That's why you can expect a bounce from the yen pairs as well. But
what are you thinking, Miad? Possibly a 116 level, take out that prior high in the yen for what could be a major trading top in US dollar yen?
US dollar yen, I don't think we're going to see 116. I would be very surprised if we see 116. It's
a day away, isn't it?
Let's take these correlations away and just look at UJ. Yes, look at UJ on its own. So looking at this chart here, I'm expecting yield curve to re-steepen a little bit. This will give it a push. I'd be very surprised if you're going to see 116 again, to be honest. I'd like to understand why that's happening, why we see those levels getting punched. About here, or about maybe max middle of 1550, I will be expecting to see this start puking again towards lower levels. Again, the whole idea is the yield curve hasn't got a lot to go here.
Yeah, you know what, you could tell when you've been around for a while, or you're talking to a guy who's been around for a while, because we all use that regurgitation word.
You do, isn't it? It comes naturally. Think about it.
I think we've all done it. So anyway, so that's interesting call. That's going to be a big move in US dollar yen, like under par.
Tough call. I like to see this into lower levels, specifically going into the next few months. Interested with the AED JPY as well, because that will be more sensitive to global sort of manufacturing and global sentiment. So once you see sentiment really sour, you're going to see AJ create some extreme downside moves as well, as you've seen here. These things happen. I'm expecting these things happen again. So really the thinking is here, it's going to go up. It's not going to go up a lot when you look at the yield curve. And once you see the yield curve is hitting that 0.9 or 1 level, you really want to go and start aggressively layering on. That's what I'll be doing, aggressively laying on short on AJ and possibly other yen pairs as well, and to see how far lower we can capture that. There's one last thing I like.
You're looking for a risk-off move during this time period in equities?
I wouldn't call that. Don't bet against US. It's a tough call. So I'm not necessarily saying S&P will go down, but I like to see some global risk off. That would be nice to start getting short that pair. The last one I'd like to discuss is Euro-USD, because a lot of people are looking at it. When I look at my FX pairs, the thing that guides me all the time is yield differentials. So if I were to take the yields from Germany, which is the benchmark for Euro, so the bond yields, and take that away from the US, so we're looking at a 10-year here. it will give me a chart which is called basically the yield differential. If I were to look at that as a whole, it gives me figures and always tends to play in a range. But if I were to compare that with EURUSD on its own, more or less, EURUSD is continuously following the yield spread as a discounting machine. As yields getting contracted, the value of EURUSD starts rising a little bit. As yields widen to the downside, most of a decade, the last few decades, you find EURUSD is dropping. Currently, we saw EURUSD extremely tight in the range. It didn't do anything. It keeps playing around the 113 level, but the yield spread's been moving higher. So I'm alarmed to the fact that even though the street callers, the EURUSD will drop to 110, in the short term, we can possibly reclaim November lows again. So that's something I'll be keeping an eye on. I'm not aggressively long yet EURUSD. I'm also very shy shorting it at these levels. I think the risk to reward ratio is extremely against you. So let me take EURUSD back.
Is there anything, Miad, that would have you looking for this dollar rally that we've had all year? You know, the market came in wrong-footed. Everyone was a dollar bear at the beginning of 2021. It was on the COT reports everywhere, sentiment, and we had a pretty good year in the dollar. Is there anything that you see yield-wise in the differentials or construct that could lead towards this dollar rally being close to being over, like US dollar yen is close to being over, and that we could have a bear market in the dollar with what you're seeing? Is there any way to build a bear case in the dollar, I guess, is what I'm asking you.
Yes, since market got really extremely hawkish on the way the Fed should react in terms of the hiking, it painted itself in a corner, Dale. That means if there's anything's going to happen in the future regarding data, regarding NFP coming low, and the Fed starts flinching, dollar is going to take a hit here. That's why you will find that in risk-off environment, followed by bad economic data, USD won't benefit like in the past. USD will get sold as a reflection of the repricing of the rate hikes.
Okay. So basically, the market might be wrong-footed, thinking the Fed is going to be aggressive and they won't be able to complete their mission. Something like that?
That's right. And in the past, we've seen it a lot of times, isn't it? The Fed says they're going to hike this amount of time, and then they just keep turning back on what they say. I doubt this time it changed. Inflation is a bit higher, obviously, but still, I think that this time, if it's going to be different, I'll be interested to see. But what's going to cause dollar to sell off is the repricing of the interest rate hikes the market is expecting. So I'll be keeping tabs on that. And the thing that will move the needle on that is either new restrictions coming in, employment slowing down, or any other data that's going to feed into GDP and it's going to make US look weaker than what we're expecting right now. That's the sort of thing I keep an eye on if you're really looking for a dollar bear market. But right now, looking at yield differentials, it looks like EURUSD got space to revisit these November lows. But it's not one of those trades that I'm not actively long yet.
Yeah. Because
my call is still for this to go lower, EURUSD, as the Fed is raising rates and the ECB is doing nothing really. But I'll be watchful. I think we have a clearer vision what's happening with gold, a clearer vision what happens with yen pairs in the big picture. In the short term, it is in a congested zone, and a lot of good things can come out of it.
Okay. Yeah, I really appreciate your views and how you use the yields, Miad. Looking at 2022, is that really most likely one of the plays that you're waiting for evidence to start presenting itself is to short yen pairs?
That's right. I think that will be probably one of the safer bets for me to work with.
Okay. And Aussie yen being your preferred short in the yen pair shorts?
That's right.
Okay. And why in Aussie? Because it is more sensitive to commodity prices and your bearish gold. So that would make sense as well.
It is to do with the commodities, but it's got more to do with AUD yen. It's much more reflective of the risk-on, risk-off environment, much more reactive to the yield curve. With the US yen, on the other side, you still got USD, and if there is USD demand, that USD JPY won't drop the way I need it to. but AED-JPY tends to do what it's supposed to do at the right time. So timing it, AED-JPY tends to be a little bit easier. I would say much easier.
Okay, any view on cable? Because, you know, everyone's so focused on the Fed tapering. Well, all they're doing is tapering. I mean, the BOE, that was an aggressive move, wasn't it? They actually did tighten.
Right, yeah, they did tighten. So looking at GBP/USD, the problem that we have here is how much further can the whole titling pricing get on? Actually, this morning I did long it, but I had to get out of the position because the dip was a bit, I didn't understand the dip, and now it's back up where it's supposed to be. I'm quite constructive on cable, to be honest. If I were to show you the yield differential, showing actually it's going to move towards at least a good 1 or 2 handles higher. So that's what I'm expecting from cable. I don't want to make big predictions because usually the playbook changes by the way halfway through January with everybody.
Okay.
But for me right now, cable is a good opportunity to get long. Again, try to long it this morning actually, but I was deceived by market action as we all get sometimes.
Okay, well, it was really great to hear your voice and really interesting presentation of yield differentials and kind of a good prep for 22 to be looking at. We're pretty close to what could be an inflection point in US dollar yen. So appreciate sharing your great work with us, Miad.
Absolute pleasure. It was really good touching base with you again, Dale. Again, we should do this more often. And wish you a happy new year and a good slide when it comes.
Thanks so much, Miad. And the best way for people to follow you, would it be on Twitter, or if you'd like to show your your website and what you're doing and what you're offering people, that would be fine.
You can follow me either on Twitter. It's my name, Miad Khosravi, on it. And I share loads of nice lake pictures and sometimes charts as well. I also have a website, speculativestrading.com, where I teach basically the macro view of how to really look at the trading from a macro perspective. Also have a trading room where I share all my setups with position sizing, entry, exits. And I talk a lot about the psychology of trading as well as things happen, how to deal with choppy markets, how to deal with drawdowns, and also how to deal with compounding your gains. So that's all the things I do cover in the trading room. I'd be quite happy to meet you all over there too.
A real pro, my trading warrior brother, Miad Khosravi. So happy New Year, Miad. I hope everything, I'm always rooted for you, and I hope 2022 is going to be, one of your best years ever in every way.
I really appreciate it. Same to you. Best of luck. Thanks for having me.
You're very welcome. So everyone's thanking you, Miad. People enjoyed it. Great presentation.
Smashing.
You could join the team in, looks like 22 minutes on the Morning Edge. I want to thank Paulie for coming in here today and sharing his work, and thank all of you. Have a good day trading. I'll see everyone tomorrow. And remember, most of all, don't just count your pips, count your blessings. Adios.